Ladies and gentlemen, welcome back to the channel. Oh boy, do we have a big video for you today. What we're going to talk about in this video is the Fed tomorrow, okay? This is the last video that will be posted to this channel before the Fed. So it's important that you kind of take note of what is said in this video. We're going to hear what Nick Timiraos says about this Fed meeting and about why the Fed's not going to signal too hard in either one direction. You're going to hear from Bank of America, from Piper Sandler, and from Goldman Sachs and their opinions on the Fed, in which they're taking a very bullish stance as well. And ultimately what the markets are pricing in for the Fed and what I think the Fed is going to do. Bottom line, the markets are already bearishly pricing the Fed tomorrow. If you're confused by that, we'll break it down in today's episode. It sounds worse than it is. Basically, you're more likely to get an upside surprise tomorrow from the Fed versus a downside surprise. The markets are not expecting the first Fed rate cut in 2026 for over 6 months into the year. There's odds that cut could come sooner, even with a strong economy. So we're going to get into all of that in today's episode. We're also going to talk about Oracle earnings coming out tomorrow after the Fed as markets are closing, and how these two catalysts could really shape up for a very strong end of this week. Before we get into all of this key information, hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys would like to come join us and trade with us and invest with us as well. But let's get started. Okay, so first and foremost, Goldman Sachs expects a 25 basis point cut Wednesday, with 2 more in 2026. Goldman Sachs expects the Fed to cut rates by 25 basis points on Wednesday, with 2 additional rate cuts coming in 2026 after an early year pause. CFO Dennis Coleman said at a company conference, he described the U.S. economy as resilient and supportive of business. Okay. Goldman Sachs here is literally just reiterating what the markets are pricing in. Okay, the markets are pricing in an 85% chance of a cut tomorrow. The Fed's going to cut tomorrow. Let's all be on the same page about that. The Fed's going to cut tomorrow. But that's not really what is important for markets. What's important for markets is how many cuts are we going to get next year? Okay? Well, the markets are pricing in a pause in January, a pause in March, a pause in April, and your first rate cut of 2026 in June. So the markets are currently pricing in a 6-month pause. Now, logically, when I ask myself, okay, markets are pricing in a 6-month pause. If the Fed says they're going to pause, that's already priced in. Now, I don't think that's what we're going to hear from the Fed verbally, right? I think the Fed is going to take a stance of not really telling you much. This is going to be one of those Fed meetings where you're like, why was there even a Fed meeting? Like, we did not really get any new information. Like, Powell's going to dodge a lot of questions tomorrow. Okay? He's not going to answer a lot of questions. He's just going to say, look, we have a lot of data coming next week, and that's what's going to help guide the decision making for the next policy meeting. Okay. So when I'm looking at markets and we're already pricing in a 6-month pause, I think there's very little chance that the markets start to price in, it would be almost an 8-month pause if we didn't get a cut until July, or a 10-month pause, right? I don't think that's the messaging we're going to get from the Fed tomorrow. Again, in fact, I don't think we're going to get a lot of messaging at all tomorrow from the Fed, which is going to be a good thing, right? Because next week we have the jobs reports coming out. We have GDP numbers coming out, exports, imports, and I believe CPI as well on December 16th. Why would the Fed take a strong stance before they have the data? That would not make 0 sense to me. Now, September 16th, we're pricing in the next Fed cut. Okay. Well, no, we're actually not. We're actually You're actually no longer pricing in a cut in September. You're pricing in the next Fed cut in October. Earlier today, you were pricing in a slightly higher chance of a cut in September than a pause, but now you're pricing in the second cut in October and then a pause in December. Okay. So you're only pricing in 2 cuts next year and a 6-month pause for 2026. I don't think the Fed's going to be more bearish than that, than where the markets are already priced for. Now, then the question becomes, what does the data look like next year? And why, or next week? And then why would the Fed be cutting rates? At this point, the consensus is the economy is doing okay. We're not in a recession. Things have recovered from a labor market perspective, from, some of the weakness we had during the government shutdown. I think Wall Street's going to walk away from the Fed meeting with a sense of economy's strong, fine. If inflation continues to make progress next year as expected, that's why we get cuts. And that's the best possible scenario. Perversely, to common knowledge, you actually don't want rate cuts because the economy is weakening. Okay? That is a fallacy. Okay? That's not how markets should work. Okay? You should not get excited for Fed cuts because the economy sucks. Okay? You should get excited for Fed cuts because the economy is great, but inflation is coming down. Which, again, I think inflation is going to be the deciding factor in how many cuts we get next year. Bunch of progress on lowering inflation, bunch of cuts. Not a lot of progress in lowering inflation, not a lot of cuts. And if there is any message the Fed does try to convene to markets, it's probably that they're going to be data dependent, that we can cut in a strong economy as long as inflation continues to come down. Okay. If we get any signaling at all from the Fed, I don't think we're going to get much though. Okay. So bottom line here, the markets are already pretty quote unquote hawkish heading into the Fed tomorrow. The Fed would really have to try to upset markets. You're already pricing in a 6-month pause. Okay. And only 2 cuts next year. And really, you're probably closer to about a cut and a half priced in next year. Now, the dot plot, I think that's roughly where we're going to be, between 1 and 2 cuts priced in for next year. Okay. Which is roughly in line with where the markets are today. Now, Donald Trump today, Nick Timiraos shared this on his X account from Politico. That says, quote, "Is it a litmus test that the new chair lower interest rates immediately?" Donald Trump says yes. But that is not what is priced into markets. So again, we'll see what the Fed says tomorrow. Nick Timiraos also shares on X from Kevin Hassett at the Wall Street Journal CEO Council that he was asked how low rates should go. He was asked, quote, "What we have to do is recognize that, like in the 90s, we are in a potentially extremely transformative time." He says, "You gotta watch and make sure the inflation doesn't take off." Question, how much lower? He says you have to watch. He says there's plenty of room to cut rates. Question, what would you do if Trump wanted you to cut rates and you didn't think it was the right thing to do? He says if inflation has gone from 2.5% to 4%, you can't cut rates then. Basically saying he would be data dependent from the inflation perspective. Now, Nick Timiraos also says here, now I'm sharing Nick Timiraos in case you guys don't know. He's seen as like someone very interconnected with the Fed, and markets pay attention to what Nick Timiraos says. Now, it says in focus as the Fed gathers to consider another cut this week, whether Powell can stitch together enough consensus to minimize dissents to the same 2 that opposed the 25 basis point cut last time. How many policymakers issue a soft dissent via their year-end policy rate in the quarterly projections? Last year, there was 1 formal dissent, but 4 policymakers who wrote down a year-end rate that was above where officials set rates at that meeting. And it says how to set expectations around a January cut. Example, how strong and credible can the hawkish signals be ahead of 2 meetings worth of data that may or may not reshape the outlook? This is what I've been saying in this video. You can't really have a credible outlook in either one direction ahead of such a large data dump next week and between now and the January cut. You really can't take a hardline stance towards January or towards the first 6 months of 2026. If not January, how can you take a hardline approach towards March or any other Fed meeting? Okay, it's hard to do so. And with the markets already pricing in a pause for 6 months, I view it as the most likely scenario is we price in a cut sooner rather than later next year. And that's where you could get this market really that begins to work to the upside following the Fed. And I should also say it's pretty rare that you have 2 Fed meetings back to back that are, bearish, that the Fed, causes markets to fall. Now, it says here, Trump expects the new chair to cut rates. U.S. President Donald Trump said support for interest rate cuts will be a key litmus test for choosing the next Federal Reserve chair, according to a political interview published Tuesday. Trump plans to announce his nominee early next year and has hinted that NEC Director Kevin Hassett is a leading contender to replace Jerome Powell when his term ends in May 2026. Hassett has repeatedly called for rate cuts and said the Fed will likely lower rates, possibly by 25 basis points, at its meeting on Wednesday. Now, this is one thing that I really wanted to share with you as well from Bank of America. They think the Fed's going to cut rates on Wednesday, obviously. But Bank of America predicts an extra move, a $45 billion monthly short-term Treasury bill purchase to maintain bill reserves and prevent liquidity issues. Combined with MBS reinvestments, total bill purchases could reach $60 billion a month. These, quote, reserve management purchases aren't QE. They aim to keep money markets functioning, not stimulate lending. This is important here. While critics may see it as money printing, the move could reassure markets amid rising Treasury issuance and concerns about tightening liquidity. Liquidity moves small caps and hyper growth and risk areas of this market. Hence 2021. Liquidity was everywhere. Stocks did very well. If the Fed were to, again, be pretty much in line with where the markets are in terms of Fed rate cuts next year, but also say, hey, they plan to buy $60 billion a month in short-term Treasury bills, that could spur some liquidity. That could spur a, pretty aggressive move post-Fed. Now, this one's also big as well. Piper Sandler says that Powell is likely to signal flexibility ahead of new data. Fed Chair Jerome Powell is expected to avoid committing to a January rate decision until key economic data arrives, says BMO's Lan Lingen. In the 7 weeks between December and January meetings, the BLS will release payrolls for October through December and CPI for November through December, potentially reshaping market views on the U.S. economy after the record-long government shutdown. So again, there is just too much data to come for the Fed to take any commitment to anything. The markets are going to love that. The markets are going to love the fact that you're pricing in a 6-month pause, and we might get a rate cut as soon as January if things were to not go as planned. Now, again, as I said earlier, that's not what you want to see. You want to see rate cuts because the economy is strong and inflation falls. Best case scenario possible, economy strong, but your CPI reports for November and December show a lot of progress in bringing down inflation. That would likely spur a cut before a 6-month pause is up in 2026. And that would be, the best possible scenario for markets. So long story short, in terms of the Fed, I think you're not going to get a lot of hawkishness. You're not going to get a lot of bullishness either. It's going to be a Jerome Powell that dodges a lot of questions, that says, hey, we're data dependent. We'll see what happens. Okay? And with the markets already as bearish as they are, I don't think there's any room to get more bearish, right? You're not expecting the first cut until June or July of 2026. There's a lot of room for expectations to go up for the January, the March, the April, or the May Fed meetings. Okay. So off face value, I have to be bullish on that. Okay. Now, if we were heading into 2026 with the expectation of 3 to 4 rate cuts, then it's like, okay, maybe there's room for some disappointment if the Fed doesn't commit to that. But with where we're priced right now, I think there's a lot of room for an upside surprise there. Okay, just the Fed not committing in one direction or the other would be seen as really good. So I am viewing the Fed tomorrow as a big positive catalyst potential for markets. Now, again, the Fed comes out, the Fed dot plot comes out, the Fed report comes out at 2 p.m., and then you get the conference at 2:30 p.m. You will also get Oracle earnings tomorrow and after hours. Mix a bullish Fed with a good Oracle earnings, and you could really see the risk on trade in this market, which has lagged behind, which has not really participated in some of the upside the indexes have seen, really explode. Okay, because as I've said before, Oracle is down still like 36% from its all-time high following last earnings, in which Oracle went up 35% on earnings. So just in the last quarter, Oracle was at all-time highs, fell 46%, still down 36% from its all-time highs after earnings. Oracle's going to tell you things are great. AI is alive and well. Companies doing well. They don't know what happened in their corporate bonds, but problem solved. There was no problem, but it's solved. Okay. Put these things together. I think Thursday could be shaping up to be a really good day for markets. Okay. But again, as I've said in previous videos, it wouldn't shock me if markets do sell off a little bit after the Fed or have a kind of volatile move, but don't end up moving higher after the Fed. Maybe not crash, but not moving higher. And then Thursday turns out to be a really strong day. Sometimes it takes a little bit of time for the markets to digest what Fed meetings mean for the markets. Now, when you throw Tesla into this equation, again, Tesla did well today. There's a lot of things going right for Tesla from a fundamental perspective, from a company perspective, from a technical perspective. It looks like Tesla wants to break out here. And I think following the Fed, following Oracle earnings, heading into next week, Tesla's about to make a big move to the upside. And even following the data on December 16th, as long as there's nothing too shocking there, you're going to get Tesla moving substantially higher. In my personal opinion, again, not a financial advisor, not a financial planner, but I do think these catalysts will be risk-on events for Tesla and will be seen as very much a positive for Tesla stock. Now, do we get robotaxi entering into new cities in the next couple of weeks? What do we hear in terms of Tesla specific news? Obviously, to be continued on that. But Tesla is a part of that AI trade. Tesla is a part of that risk-on trade that I think is going to be benefited most following the Fed tomorrow. And I think a very explosive rally is coming soon for this market. And I don't think a lot of people are positioned for it. I think there's a lot of people underweight this market, even retail investors. I think there was a lot of capitulation and a lot of selling pressure during this last crash. And in my opinion, like I'm ready. I'm going to be positioned to be ready for upside within the next couple of days. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one. So let me know your thoughts on all of this down below in the comment section. It also looks like Bitcoin beginning to kind of lead a little bit, which Bitcoin has been leading. Whether Bitcoin goes up or sells off, stocks tend to follow suit in the coming day or two, right? Bitcoin leading this recovery, getting back to some of the levels you were at in mid-November. If we can break out further from here, if we can get closer to 100,000, break above 100,000, things get really exciting to the upside. So Again, let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community. Have a great rest of your day, and I will see you in the next one.